Alright everyone, Cowboy Trades here, welcome to the channel, welcome to the educational series. In today's episode, we're going to be discussing fractals, how to use them over on TradingView, and also when you want to use them. So we're going to start off the video showing you plain and simple how to incorporate this over on TradingView. We're then going to show you examples of when you might want to use it. So for example, do you want to look at human emotion replicating in the markets? Do you want to look at how economic data has previously influenced these charts? Or do you simply kind of want to take a grab of one breakdown and see, what would happen if we continued this breakdown with something like an AB equals CD pattern? So let's dive right into the video and start off on how to get this for free over on TradingView. We're going to clear up some of this data so we can do this all together. So on this chart, we're looking at the S&P 500. Now, at this moment in time, the S&P 500 is breaking into a bear market and we are in a recession technically. So the thing is, you can compare other asset classes to, different asset classes very, very simply. I can overlay Bitcoin and, slap this over the top of the chart, but I can't overlay this on the top of the chart and then move the data left or right. They are now pinged together and they're showing the exact same data. So if I did want to compare how the S&P 500 reacted in 2008 compared to how it reacted to now, overlaying this comparative chart of the exact same chart isn't going to help you. So let's go back and we'll use the bar tool. Now, I'm going to go all the way back here to 2008 when the recession started. You want to come over to the left side of your screen, click on the tool just above the smiley face, come down to the bars pattern, this one right here, and you want to favorite this so it turns up in your toolbar. Now, for this example, we're going to be looking at human emotion replicating cycle from cycle. So we're just going to take an exact grab of the peak. How to do this, you click on the tool, you want to put it one to the left of the candle that you're looking at, so you're encompassing it, and then you want to drag all the way down and make sure you're dragging down so when you click, you've got all of this data from here to here. Now, if you are on a log scale, which is what I'm doing in the higher time frames, you definitely want to use a log for this. You just want to make sure that these two line up and there hasn't been some type of dramatic error where the market or where TradingView has kind of separated these data points a lot. You can actually see TradingView sometimes squishes this because I'm using a log chart. So now I've readjusted this. You can see this is beautifully lined up. All you want to do is grab this and walk away with it. Now, right off the back, this might be white and you might have a white TradingView chart, unlike myself. I have the black one. If you do want to change the color of this, simply double click it. If you've got a white chart, you might want to put this as, black or green or red. As you can see, when this is black, I can no longer see it. So I'm going to revert back to this nice, off-whitey hue color that I've got here. So right off the back, we're looking to start with, now we know how to take these grabs of the data. I'm going to show you one example of when to use this when we're looking at human emotions. So what we're going to do is we're going to overlay this. You can see the peak in the S&P 500 was here. If we overlay this peak from peak, we're not looking at January 1st to January 1st. So for example, things like October earnings season, they're not going to happen at the exact same time on this chart. So really, when we're looking at the peaks and the troughs in this bar pattern or in this, fractal, because once again, basically this S&P 500 chart, these green and red bars, these are Japanese candlesticks from what is happening right now. But this right here, this off-whitey hue color, this is what happened in 2008. So once again, when we're looking at this, we're getting a good example of how human emotions are replicating cycle to cycle. Now, what if, like myself, you're an economist and you're very keen on looking at how economic data, such as, GDP reports, which are quarterly GDP reports, or what happens if you want to understand how, October earnings season or other earnings seasons have influenced the markets in prior dates? Well, what you can do is you can go over. So once again, we're using the S&P 500 chart, and you can simply take a grab of the data from January 1st. And as you can see here, this isn't the exact peak. We're looking at January 1st to January 1st. And then you want to come over to what we're doing now. And you can see January 1st is pretty much right at this peak. So we're overlaying January 1st to January 1st. And when we do this, we can get a really good idea of how things like October earnings season affect the market. So As of the time of recording this, we've just finished the month of October, and we did have a positive October earnings season. And you can see this is also what happened in 2008. You will have to research that, yourself to see, how these previous economic data have affected the chart. Obviously, this is just telling you the direction of the chart. But for example, if you're looking at January 1st to January 1st, you can see the month of October. And once again, we know the October earnings season was very positive. So we can kind of correlate these two, and we can say, hey, in the 2008 recession, we did have a fairly big rally based on positive earnings, and this is also what we're doing now. So once again, when you're looking at January 1st to January 1st, you're really focusing on economic data, whereas if you're loading it from peak to peak, you're not looking at that economic data because they're not showing up on the same dates. You're looking at human emotion. So for example, you break down into peaks, and then there's going to be, depression in the markets. Then there's going to be euphoria. Then there's going to be depression. Then there's going to be euphoria. And, these depressive, manic switches between, bull and bear, these often replicate cycle over cycle. So I do highly recommend, if, like myself, you are interested in these fractals, you're looking at a range of these. You're looking at both human emotions and economic data. Now, the final one is going to be for AB equals CD patterns, or for example, maybe you just want to see, what would happen if we had another breakdown. So, for example, yeah, you can look at this. This is an AB equals CD pattern. Basically, this is A, this is B, this is C, and what an AB equals CD means is this is the move from A to B, this trend line right here, and if we extrapolate this move from C, this would be D down here. So once again, it's really simple. The move from A to B equals the move from C to D. Now, if you're drawing this with a trend line, you can see, we do have a price target down here. You can see it is at 11,700. Now, let's remove this, and let's look at another way of how we can draw this, because once again, if we're looking at this data point, this one line is only telling us this is where we start and this is where we go down. It doesn't, tell us, the peaks and troughs in the market. So one interesting thing that you can do is take a bar graph pattern of this. So once again, grab your bar patterns, come up to the top of the chart, and what I'm going to do is I'm going to extrapolate this out. So I'm basically encompassing this entire bear flag. And the reason why I want to do this is now when we look at the move from A to B and we come over to C, what I can do is I can overlay this and I can put this on top of C, and I still have that exact same AB equals CD pattern telling me the price target is around about this range. But what I also have is I have a chart which very much shows the ebbs and flows are similar in this market. And you can also see, once again, this trend line that was coming down like this, saying we're going to come down to these levels, it didn't say when we were coming down to these levels, and it also didn't say that we would create another bear flag pattern. So, if I delete this, you can really see, we're forming a very, very elongated flag, which is very similar to what happened over here. So these are just a few use cases for bar patterns, and obviously, when you're looking at these recession fractals, this data can be extremely useful, especially if, like myself, you do use a lot of analysis comparing, the S&P 500, the DXY, and all those other things. But like I said, if you are just a cryptocurrency trader, this is also great for looking at things like AB equals CD patterns. And you can also, if I do quickly just pull up one last chart, because there is also one other thing that I guess you could use this for. If we do reset this data, you could say, for example, I want to look at what happened in the 2017 bear market, come over to a log scale, grab this, pull this down, and I might say, hey, I want to see, hypothetically, if I put this here, what does this kind of tell us about the market structure? And right now, at this moment in time, I guess we'll see how this ages, but this fractal has followed along pretty well. You can see it built out a support floor that in 2018 we were holding for a very, very long time, and it is also kind of similar to what we're doing right now, where we're building out this super long support floor. Obviously, if you're watching this in the future, this will be different, so take this into consideration. I'm just looking at the price targets now, but based on this fractal as well, it would be saying that we should be coming to the downside and then bouncing back up. For some of these fractals, you do have to bear in mind as well, they don't necessarily say just because you're taking a grab of one bear market to another, it's not necessarily saying that you're going to come down to this specific price target of 7,000, but you can see that this is useful. Even though we had a euphoric drop down here, you can see in 2018 we had a bounce, and over here a little bit later, but we had a bounce. You can also see we broke back down, made higher lows. We broke back down, made higher lows here. You've got highs, and you can see, you know, the market situations where you're bouncing back up, and then you're finally, you know, this was where you're building out the support floor. This is exactly what we're doing right now. So fractals can definitely be useful. I hope this helps some of you. So that's all I've got for you for this video. I hope you found this useful. As always, this is really one episode out of my entire educational series. This is going to be the 30th upload. There is tons of information in here if you do want to come and check this out. So for today, Cowboys, that's all I've got. If you enjoy the content, like, comment, share the videos with your friends. Cowboy out. Peace.